Thank you for tuning in and welcome to the June portfolio update. I will be going through the stocks I bought, how much I made in dividends for this month, dividends year over year for June, and a portfolio update in full transparency where you can see the value, performance, holdings, wins, and losses. Before jumping into the content, for those who are new, welcome. My name is Dividend Dashboard, and in this channel, I track my investing journey. You can find portfolio updates like this video, road to 100k invested, and stocks analysis here and there. Day by day, I'm getting closer to reaching 2,000 subscribers, so if you like this type of content where real people invest real money, consider subscribing. It helps the channel grow and put my name out there. Let's dive in. For the month of June, I continued my strategy of slowly building up high-quality positions by adding to my core holdings. Here's what I bought. S&P Global, 0.56 shares. Automatic Data Processing, 0.93 shares. Google, 0.26 shares. MasterCard, 0.12 shares. And Visa, 0.09 shares. These purchases reflect my commitment to strengthening the foundation of my dividend growth portfolio with companies that offer consistent earning power, strong competitive advantage, and long-term capital appreciation. Specifically, the buys in Visa and MasterCard that were timed during a recent dip in their share prices. Both stocks have since rebounded, which reinforces the importance of staying vigilant and ready to take advantage of short-term weaknesses in high-quality names. Even small, incremental buys can make a difference over time, especially when adding to world-class businesses at discounted valuations. As I move closer to my long-term goal of hitting 100k invested, the focus remains on owning the best companies in the world, slowly, steadily, and with conviction. This month, 11 companies paid me a dividend, marking another step forward in building consistent and reliable cash flow from my investments. While the amounts may be small right now, the foundation is being laid out brick by brick, and that's the power of dividend investing. Each dollar earned gets reinvested into more shares, fueling the compounding machine. The long-term goal? Financial freedom powered by passive income. The 11 companies that pay me a dividends are the following: Visa, $2.80, Microsoft, $1.54, Realty Income, $5.89, Kroger, $5.59, Pepsi, $9.89, Waste Management, $3.43, Home Depot, $2.89, S&P Global, $2, Google, $2.42, Johnson & Johnson, $9.17, and Hershey's, $20.02, for a total amount of $65.64 in dividends for the month of June. These dividends were manually reinvested to buy additional shares. Every dollar counts, and June continues to prove how powerful consistent investing and compounding can be. Here's a look at how far my dividend income has come each June since I started this journey. 2020, $1.50, 2021, $6.95, 2022, $12, 2023, $40, 2024, $62, and 2025, $65. In just 5 years, my June dividend income has grown by over 4,000% from where it started in 2020. This steadily increase is the result of consistent contributions, reinvested dividends, and a focus on buying high-quality dividend-paying companies. The best part, these dividends are completely passive, and they are only going to grow over time. This is what dividend investing is all about, compounding progress towards financial freedom. Moving to my portfolio update, we have a dividend stock portfolio sitting at $26,000 with a weighted dividend yield of 2.42%, which translates to $556 in projected annual dividends. The portfolio consists of 21 holdings. At the end of June, my dividend stock portfolio is up 4.25% year to date, slightly outperforming the S&P 500, which is at 4%. While the margin may seem small, it's a meaningful sign that my strategy, focusing on high-quality dividend-growing names, is holding on its own against the broader market. What makes this even more satisfying is that my portfolio is built with a long-term mindset, prioritizing reliable income, strong fundamentals, and sustainable growth over chasing short-term trends. This kind of performance, combined with consistent dividend income, gives me more confidence in the foundation I'm building. The goal isn't just to beat the market in a given year, but to build a portfolio that performs well through all market cycles while paying me along the way. Over the past years, I've been intentionally about building a portfolio centered around quality, resilience, and long-term growth. Each holding is carefully selected based on its fundamentals, dividend consistency, and ability to thrive through different market environments. Today, the portfolio is a blend of world-class businesses that span across multiple sectors, from consumer staples and industrial leaders to financial powerhouses and tech innovators. What they all share is a track record of strong earnings, durable competitive advantage, and shareholder-friendly policies like growing dividends and steady buybacks. Going clockwise, these are my holdings: Apple, Colgate, Realty Income, Procter & Gamble, Waste Management, Kroger, Starbucks, JP Morgan Chase, Home Depot, Johnson & Johnson, Nike, AbbVie, Texas Instrument, Hershey's, Pepsi, Visa, Automatic Data Processing, MasterCard, Google, Microsoft, and S&P Global. Every addition and every adjustment is made with one goal in mind: to increase the overall quality of the portfolio while remaining aligned with a long-term dividend growth strategy. The endgame isn't just short-term performance, it's building a reliable, wealth-generating machine that rewards patience, consistency, and discipline. As my portfolio continues to evolve, one of the most encouraging signs of progress is the increasing consistency and strength of my annual dividend income stream. Across 21 holdings, my portfolio now generates a diversified flow of dividends, with several positions contributing meaningful amounts on their own. Some of these holdings are already producing over $30, $40, and even $80 annually, while others are earlier positions that are steadily growing as I add more over time. This variety is by design, blending dependable high-yield payers with lower but high-growth names that have the potential to become significant income contributors in the future. What matters the most isn't just the individual numbers, but the collective impact. These companies are sending me over $100 per year in completely passive income, just for owning shares in businesses I believe in. And the best part, this income grows through the dividend increases, reinvestment, and additional purchases. One of the best ways to evaluate the long-term progress is by looking beyond just dividend income and focusing on total return, the combination of capital appreciation and dividends received. As I review the current performance of my portfolio, I see a healthy mix of positions that have delivered strong gains. Some are in their early stages of compounding, and a few are still underwater. Several of my holdings have grown in different percentage amounts, showcasing the strength of high-quality businesses that can thrive over time. These are the kinds of companies that form the core of a reliable dividend growth strategy. At the same time, a few names are still in the red. While it's never ideal to see negative returns, I view this as opportunities, not setbacks. Some are recent positions or have gone through temporary headwinds, but their underlying fundamentals remain strong. These dips give me the chance to lower my cost basis and position myself for future upside. This total return breakdown reinforces the importance of staying diversified, being patient, and sticking with a long-term mindset. Not every stock will take off right away, but time, discipline, and consistency investing are powerful equalizers. Overall, I'm proud of the progress and I'm excited for the compounding yet to come. That will be it for this video. If you made it to this part, thank you for supporting. Don't forget to like this video and subscribe so you can follow along and grow together as investors. Thanks for watching again, and I'll see you in the next one.